Hello everyone watching this video. My name is Priya Duggal and today I would be telling you about alternative investments. What are alternative investments? You would be able to answer this question after watching this video. Alternative investment. As you can see in the image on the left hand side of the lake are the traditional investments which are stocks, bonds and cash. Whereas on the right hand side of the lake are the non-traditional investments which are antiques, real estate, private equity, art and hedge funds. All these non-traditional investments are alternative investments. So we can define alternative investments as an investment which is not made in bonds, stocks, and cash, which means that investments in real estate, private equity, land, venture capital, intellectual property, and equity long short strategies are all alternative investments. Today, there are over 520 alternative investment funds which are registered with SEBI, which is Securities and Exchange Board of India, regulator of the securities and commodities markets in India, owned by the Government of India. Now, the alternative investments can be divided into three categories. The first is investments in SME funds, infrastructure funds, social venture funds, and venture capital funds. These are the funds which invest in economically and socially desirable ventures. Category 2 includes private equity and debt funds, and category 3 includes funds that employ complex and diverse investment strategies that take on higher levels of risk in an effort to earn higher than average returns. Example of third category is hedge funds, and those which do not fall into category 1 and category 3 are in category 2. Now let's see what are infrastructure funds. Infrastructure funds are those sector funds which invest in companies that are either directly or indirectly involved in the infrastructure development in India. That means the companies that are involved in the industry like energy, power, metals, estate, etc. are part of infrastructure segment. The Government of India established the National Investment and Infrastructure Fund Limited in 2015 to invest in domestic infrastructure. Now let's see what is venture capital and SME. S stands for small, M for medium, and E for enterprise. Venture capital and SME funds. Venture capital funds are pools of capital that typically invest in small, early stage, and emerging businesses that are expected to have high growth potential but have limited access to other forms of capital. Although venture capital carry high risk, because they invest in unconfirmed emerging businesses, they can generate extraordinary returns. Medium-sized enterprises are heavily traded in stock market. Because of relatively high volatility of SMEs, they are not suitable for risk-averse investors. Now let's see what are private equity. Private equity funds. Private equity funds are pools of capital to be invested in companies that represent an opportunity for a high rate of return. As an Indian economy grows, individual wealth grows, and expertise of Indian firms blossom, more investors may gravitate to investing in private equity funds. They come with a fixed investment horizon, typically ranging from 4 to 7 years, at which point the private equity firms hopes to profitably exit the investment. Now let's see what are hedge funds. Hedge funds. Hedge funds pool money from large investors like high net worth individual, endowments, banks, pension funds, and commercial firms. This pooled money is used to invest in such securities in national and international markets. There is a long list of securities where hedge funds can invest: equities, bonds, real estate, currencies, convertible securities, derivatives, among others. After private equity funds, venture capital funds, and real estate funds, hedge funds are the most popular alternative investment funds in India because some hedge funds are expected to generate returns in rising and falling markets. Indian investors with high risk appetite are attracted to them. Finally, a long-term view for your investment plan is essential. The most successful investors are the ones who keep an eye on the distant horizon by remaining fully invested, paying less attention to the fluctuation of prices in market. These fluctuations are known as volatility. Thank you for watching this video.